back on Alpha Charts with a state of the market video. Today is August 18th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Thank you all for watching the video. If you haven't done so yet, please like and subscribe to my YouTube channel. I appreciate that, right? That's how I keep doing these things and put this one out there for free. If you haven't followed me on Twitter yet, it's at AlphaCharts365. Please, I post things there all week long, all the time. I think it's a lot of good information. Sometimes it's fun, sometimes it's a cat video, right? But I think there's a ton of stock information that I offer, again, for free all week long. And then if you like my stuff and you think I can help you, then I do have a subscriber group. It's $10 a month. It's an educational group to keep people, again, on the right side of the market in the best names possible. So being on the right side of the market is so important. That is one of the biggest, probably the biggest edge that we have in the market, is trading in the direction of the market. I think that I've helped a lot of subscribers, and you've seen some of the commentary, stay on the right side of the market, help them make their money, help them keep their money, to figure out when the market's going to be turning, help, usually, we get it right. We don't always, obviously, but, if we're wrong, we know when we're wrong pretty quickly. But it's built for everybody. If you're working full time and can't look at the markets like all the time, this is for you, right? Because for a couple hours a week, you are basically getting everything you need to know for the market to make your own decisions, right? At least everything that I think that you need to know. And it may only be part of what you do, but I think it's going to help you quite a bit. Again, you read this, if you want to, but basically I do special videos on Sunday. I do market notes. I do focus list video, which is a completely separate, shorter video on Sunday as well. There's a focus list video. There's my market note. Tuesday, I do a midweek video. Thursday, I write another market note on what's going on in the market, what we're looking at, how we're doing in the market, right? Every night I share a scan, my best scan for idea generation. Also on Sunday, I have my stocks to watch video is a separate one for subscribers. I make about 45 minutes, an hour long, going over the entire week to help generate that plan on the weekend. So when we're working during the week, we don't have to make emotional type decisions as we're going, right? So I do basically do it all for you. I want to be your co-pilot in this. You make the decisions. I won't ever tell you to buy or sell. It's your decision alone, but we have really good dialogues, being my subscribers, about what's going on in the markets. They send me chart requests. I'll take a look at them, give my honest opinion. And it's about helping you maximize profits and minimizing risk while trading, and also keeping the money that you made in the market. We talk about that all the time, and me and my subscribers, we want to keep the money we made. We don't want to make a bunch of money then give it all back. That's not how we grow our equity curves. Your time is valuable. And I want to provide extreme value. It's $10 a month. I think that's less than a fast food meal, one a month. To get this much type of education is totally worth it, in my opinion. At Alpha Charts 365, click on the subscribe button. Really easy to do. You don't like it next month, you can unsubscribe, right? No big deal. But I think it's worth a try. So thank you all for giving it a chance, and I appreciate it. Again, the subscribers have been the feedback I've gotten is extremely positive so far. So I appreciate that. All right, let's get into these charts. I've talked enough about that. S&P 500, we got real cautious when we saw this day, and then it's really just kind of waterfall down. It's coming into a area that is maybe support, maybe not support. We're going to find out in real quick, probably next week. But right now it was a positive reaction, I think. Let's just zoom in here on how it kind of kicked back up, right? This is kind of like it gapped down, and then the buyers kind of stepped in. Still closed down, just barely, but down on the day. But on the week, just look on the week for a second. On the week, you have 3 weeks now down, 2.3, and now another 2, right? That's roughly 5% over the last 3 weeks. That's a decent amount, right? That's a decent amount. What was it? Roughly 5% or so. So I think this green area is a major area. But this week it was down 2.11. The RSP was down 2.64. Wash out of breath, right? Wash out of breath. That's what it says. It ended up being green today, though, the RSP. Again, that's a good positive sign for, at the very least, a bounce. I still think we're in a stronger downtrend, but this looks like maybe a short-term bounce, maybe in the cards. But things are still looking pretty negative with underneath all these moving averages. All right. So the Qs look a lot like the S&P. If you see it here, again, we did get a nice little bounce. Maybe it comes into this area, maybe it doesn't. Again, these curling down moving averages are pretty nasty. On the week, we were down. On the week we were down 2.21, the week prior 1.56, and then 3% the week prior to that. So you see the Qs are taking on the chin way more than anybody else, down 7% in the last 3 weeks. So definitely hurting much more than the Qs, and it has to do because they're much heavier into the tech and mega caps. And you see how on the week is 2.53. So I don't remember what I said for the Qs, so I got to go back. Right, so way more on the equal weighted Qs. And again, that's a breath deterioration. And then when we go to the daily, also green though on the day, right? So you see that divergence, right? So equal weighted products were green, where the cap weighted were not green. Again, that's a positive divergence at this point, right? So maybe we get some sort of bounce into the week. IWM is equal weighted, and it was up 0.5% today. Again, it went down, tested the 200. That was an area we were watching. It cut below it and then came right back. That's, again, a positive sign on heavier volume, right? Is this the bottom? We don't know. We won't know until after the fact, but this is potentially a bottom. And we'll see what happens as it comes back into this, general area right here, 189, 190, something like that. All right. But again, I still think there's a downward pressure in the market, and you see how this is starting to get, kind of tightish. All right. So that's IWM. So let's see what the financials did. Oh, see, I never do mid caps. I love me some mid caps, man. Let me tell you, mid caps, not quite as good as the small caps, but stayed above the 200. So you see a little bit stronger than small caps, but still got that curling over moving averages, which doesn't look good, right? It just doesn't look good. Looks, couldn't break out of here. Still some trouble, obviously. All right, so XLF. Underneath the 200 now. See, that's a problem, right? We don't like anything underneath the 200-day moving average. Now, if it can stay above 30, we're in okay. That's fine. But even if we get a bounce, this is a tricky area right here. Definitely not something I would want to play to the long side, and looks, again, like it's losing all of its moving averages, which just is not good. SMH had a nice day today, up 0.43, but again, it's got a flat 50-day and just trying to move lower. It may get a bounce. I wouldn't be shocked if it hits, goes up to 150. If it gets above 152, I change my tune, right? I think that we'll be in a different type of market. Right now, we're not even close to 152. So yes, we may get a bounce, but right now I'm looking at this more of an oversold bounce than anything else. Still looking pretty weak. Again, I'm not a person that's going to catch the exact bottom or the exact top, because that's guessing. Nobody really knows the exact bottom or exact top, right? That's just the way it goes. Let's look at the equal weighted XSD, because I do like them as well. Now that got actually close to the 200-day moving average, which is kind of interesting. And we'll see. Maybe it comes in, retest this 208 area. I don't know. We'll see. Right now it's at 200. Kind of held the 200. Testing 208 would be interesting, right where these moving averages probably would be pretty close to. Then we'll see what happens. ITB, this is the home construction ETF, came hard down. Man, this week has been rough on this one. Down 4.34 in the week. Hard down into here. Obviously, not obviously, but in my opinion, this was an area where we may have seen a bounce. We may still see a bounce, and maybe it comes up a little bit. But again, it's going to come up into these moving averages, which makes me think that it may just come up and then potentially come down here and try to either retest the original breakout, which will be right about where this 200 is. And that would be a logical area of now multiple support area, right? So we'll see what happens. But housing, not so good. And then transports, let's just finish up the ETFs. Yeah, pretty ugly as well. We talked about this rising wedge weeks ago. It played out the way that rising wedges a lot of times do. And now it's below the breakout area. That's a problem, right? Transport's below the breakout area. So again, this gets me extremely cautious. So indexes looking like a bounce is possible, but cautious, and ETFs looking like a bounce is possible, but still super cautious. Let's look at the internals, because if I remember right, the VIX wasn't moving at all, or credit spreads. So let's see what they look like. So there's VIX. So yeah, it went up a little bit, but still nothing crazy. You're not seeing any of these gigantic moves up. And so that says that the market is still not pricing in volatility lasting a long time. That's what that says, right? 30 days. So right now, volatility will be increased over the next 30 days, but nothing crazy. That's what that tells me. Credit spreads, the bond market, what are they saying? You know, they're not really whining all that much, which is, again, a bullish sign, I think. So whatever we're going through may be short-lived, is what these two indicators are potentially saying. Again, we only know after the fact. If we see a big spike, that blows everything out of the water. Percent of stocks above the 50-day is down to 37% or so. That's kind of nasty, but it's not, in my opinion, extreme. Again, we may get a little bit of a bounce, but until we get into just a little bit lower, it's not extreme at all, right? So it's deteriorating 100%, not looking good, but not extreme. And then let's look at the put call ratio. This one spiked up to 1.3, which was pretty high again, but didn't really get into the above my orange line. I think above the orange line is when we get a potential bottom. I don't think we're there yet, but this was encouraging. People were willing to get bearish pretty quick, and they came back in a little bit today. All right, dollar has been running the market, and it kind of went sideways today, and didn't do really much at all. 0% change, just down slightly. And this is a logical area for that as well, right? Don't be surprised if this is some kind of inverse head and shoulder here. This could be a bigger inverse head and shoulder. Maybe it needs longer to materialize, be symmetrical. But I can say that this looks more like a bottom than a top. So even though we have lower highs, again, this looks more like a bottom than a top. And if this does get above, this general area, we'll call it 104-ish, and then start making higher highs, that's going to put a lot of pressure on stocks. We're not there yet. And again, it may come back in, which will put some relief on the stock market. And that may cause that, again, the counter trend type of rally that I've talked about. Let's look at the year. Everyone's a 10-year yield expert. I am not one, but I was talking about it because, well, we at the highest level since 2007. I go to a weekly chart. Last time we were at this level, right? I mean, I guess we were close to it here on October 17th, but beyond that, it was 2008, 2007, 2008, right in this area right there. So that was it's significant. I still think we're going to 5%. However we get there, I'm not sure, but to me, again, this looks more like a bottom than a top. We had a 2% move higher in yields. That's a big deal. And so we got a little relief today, and the market obviously started to rebound when it got that relief. We'll continue to watch it, but to me, it's still an uptrend. So that's what we're saying. And then look at the copper gold ratio, right? So we started to break down, and we got a little bit of relief here. So it hasn't quite broken down yet. Still in the uncertainty zone, right? The uncertainty zone, but definitely a higher low from here. That's something, right? We'll take that. If this starts to roll over, then it's definitely a risk off signal. And if this continues higher, then it's a risk on signal. That's as simple as that goes, right? So copper gold ratio right now, again, undecided area as we speak. So let's wrap it up. S&P 500. ripe for a counter, and all the indexes really, and probably growth stocks and all that stuff, ripe for a counter and rally. Next week's a big week. We have Nvidia earnings on Wednesday, and we have Jackson Hole at the end of the week, Thursday or Friday. You have to look it up yourself. I may have been Friday, but check it anyway. So, relief rally, especially the beginning of the week, kind of makes sense. Everything is saying that I can see, and then and really the internals are kind of saying, don't worry about it. Things are this is just a normal run-of-the-mill pullback in a bull trend. I don't know if that's going to hold true or not. So somebody's got it wrong, right? Somebody has it wrong. With a 10-year and dollar, if they start to break out, that's going to put immense pressure on equities. Anyway, that's what I got for you. Good luck next week. If you haven't followed me, please follow me on Twitter at AlphaSharks365. Consider subscribing. I think I give a ton of information, totally worth it. And like and subscribe. All right. Good luck, everybody. Take care.